Matt Taibbi, who has written extensively about dysfunctional American capitalism, perfectly described everything that is wrong with Wall Street when he wrote, "The first thing you need to know about Goldman Sachs is that it's everywhere. The world's most powerful investment bank is a great vampire squid wrapped around the face of humanity, relentlessly jamming its blood funnel into anything that smells like money." That's great writing. It's so true. This description captures the essence of hyper-capitalism that has infected Wall Street since the 1980s. Goldman Sachs and the vast majority of Wall Street's banks, investment banks, and hedge funds have fully embraced the ultra-free market orthodoxy of libertarianism. To them, American workers don't matter. American families don't matter. American communities don't matter. The only thing that matters is money. Lots and lots of money. To Goldman Sachs and most of Wall Street, concepts like the common good simply don't exist. Who broke capitalism? In this episode, we're mostly going to talk about how Wall Street broke capitalism. But over the past few episodes, we've talked about how libertarian economists, big business, and CEOs have also broke capitalism. As executives at large corporations made tens of millions in compensation while cutting middle-class jobs and embracing cheap illegal immigrant labor, Wall Street made billions by jamming its blood funnel into the heart of American prosperity. The American middle class once celebrated family, community, and loyalty to their companies, but Wall Street celebrates individuality, selfishness, and agrees with Gordon Gekko that greed is good. Yes, greed is good for billionaires and millionaires on Wall Street, but greed isn't good for a healthy, vibrant, safe society. Hello, America, and welcome to episode 20 of the American Restraint podcast. I'm really excited about today's episode. I have been waiting for this episode for a long time. I got a lot of problems with Wall Street, and I hope you enjoy this episode. This episode's about how Wall Street broke capitalism. I'm your host, Patrick Trepanier, author of the book American Restraint. On this show, we discuss how to fix America. We don't do hot takes on political news. We try to look at how to fix America by shrinking Washington, D.C. We also look closely at some of the root causes of America's brokenness. And today, we're looking at how Wall Street broke capitalism. As always, please subscribe to help get the word out. So, why does Wall Street exist? What is Wall Street's purpose? Economic theory says that the purpose of a stock market is to provide capital to businesses so they can grow and hire people. But as libertarian economists turned capitalism into hyper-capitalism, they also redefined the purpose of a stock market. To them, the purpose of a stock market was purely to make more money without any ethical guardrails. The interests of workers and communities became irrelevant to the interests of capital. In 1980, the financial sector represented about 2% of the U.S. economy. That's probably pretty appropriate. But today, financial institutions have tripled in size, representing 7% of the economy. If the finance sector provided important benefits to the United States economy, you could argue that tripling, almost quadrupling the size of this sector over the past 50 years is a good thing. However, the enormous growth of the financial sector has had disastrous consequences for the vast majority of Americans and most American institutions. So, how has Wall Street evolved? Wall Street has had an outsized influence on the American economy during the Roaring Twenties. The Great Depression taught government leaders, business leaders, and average Americans that Wall Street needed to be restrained. For the most part, Wall Street played its correct role, providing capital for businesses to grow and hire until the Reagan Revolution, which we discussed a couple of episodes ago. During the 1980s, libertarian economists encouraged regulators and Congress to allow Wall Street to basically regulate itself. Wall Street dealmakers proceeded to use enormous amounts of debt, junk bonds, and other speculative strategies to acquire and grow major companies. This was the beginning of the process whereby Wall Street took over the American economy for good. So, just for some flavor of some of the worst ideas from Wall Street, the free market lovers of Wall Street they've been at it for decades, producing one destructive financial product after another. Just a little walk down memory lane. The 1980s brought us leveraged buyouts, LBOs, and junk bonds. That worked out great. The 1990s, the dot-com IPO frenzy and underwriter collusion, another huge success for Wall Street and the American economy. And then in the 2000s, mortgage-backed securities and collateralized debt obligations brought us the subprime meltdown of 2008 and almost wrecked the entire economy. And in the 2020s, just one example of many SPACs, special purpose acquisition companies, one of the dumbest ideas Wall Street has ever come up with. I could keep going. High frequency trading algorithms that benefit the less than 1%, credit default swaps, microcap, pump and dumps. The pattern is clear. Why does anyone still trust Wall Street? How do they keep producing billionaires and multimillionaires while destroying the middle class, profit off shipping millions of jobs overseas, and continually putting the U.S. economy at risk? The results of Wall Street's breaking capitalism speaks for itself. Multiple recessions, which led to massive job losses for middle class and working class Americans. Stagnant wages for the middle class, as Wall Street and big business executives steered massive compensation their way rather than to workers. A broken investment system. American stock exchanges have been transformed from a system designed to help grow businesses and hire workers. Today, 85% of Wall Street activity is speculation and gambling on exchange rates, interest rates, derivatives, options, activities that do very little to help the middle class or workers. And lastly, the fruits of Wall Street, constant economic instability. This instability has broken the social bond that used to exist between companies and employees. There is no trust and loyalty at American companies anymore, and Wall Street's embrace of hyper-capitalism is largely to blame. So all of this kind of leads to this situation where Wall Street is morally bankrupt. As Wall Street and other financial institutions increased in size and wealth, they simultaneously shrank in terms of morality and commitment to Americans and their communities. Wall Street grew too big, too wealthy, and too indifferent to the social fabric of America. One reformed Wall Street executive, Chris Arnaud, brilliantly described how Wall Street abandoned its previous values as financial institutions embraced amoral hyper-capitalism. He said the older norms embodied by the elite Wall Street firms restrained their selfishness, with the lingering sense of an obligation both to the nation as a whole and the communities their clients lived in. Once untethered from these outdated views, they plowed ahead into junk bonds, leveraged buyouts, distressed debt, and other complex financial products whose goal is intentionally unclear, all clutching tight a copy of Ayn Rand. So here are some of the latest examples of how Wall Street keeps breaking capitalism. At the top of Wall Street's food chain nowadays are private equity, PE firms, and hedge funds, often led by the most ruthless investors. Since 1980, PE and hedge fund managers have steadily taken up a larger share of the highest income groups, including the richest 400 people in America. Here's how the private equity scam works. PE firms take over a mid-sized company, load it up with debt, strip it of its valuable assets, and send jobs overseas to countries with cheap labor and lax environmental regulations. The PE executives get filthy rich while leaving an economic hole in hundreds of towns across America. You see, Wall Street doesn't care about how their financial practices lead to social disruption or continuous economic insecurity, because Wall Street doesn't care about America. Unaccountable, out of control Wall Street, like big business and CEOs and libertarian economists, is a threat to family, community, and health. For the past few episodes, and this episode, we've been talking about how states can push back because Washington won't do it. States still have power if they choose to use it. A restraint formula state, what I've been talking about the past few episodes on hyper-capitalism, should consider legislation that channels financial institutions' activities toward helping rather than harming Main Street. So here are three key policy ideas. Number one, restore financial institutions to their original purpose. Financial institutions operating in a restraint formula state should be encouraged to operate as close to neighborhoods and communities as possible. They should focus on community and local company investments rather than short-term, risky, speculative, debt-laden gambling. Number two, de-risk the economy by taxing exotic financial instruments. Banking is pretty straightforward. Customers deposit money, banks loan it out for a reasonable profit. Financial products like derivatives should either be banned in a restraint formula state or heavily taxed to minimize the risk they introduce into the state's economy. And the third idea is put stock market and Main Street taxes on the same playing field. The upper classes have dramatically increased their wealth over the past few decades because so much of their wealth, income, and assets comes not just from their income, but from their financial assets. While the middle class lives paycheck to paycheck, the upper classes live in a different financial universe with dramatically lower tax rates, especially on capital gains. And that's what this is really about. Taxing labor or, taxes that a worker pays versus capital gains tax rates. Why are capital gains tax rates so much lower than average worker tax rates? So that's it for today on this episode of How Wall Street Broke Capitalism. I hope you enjoyed it. Appreciate your comments below. And remember, if we want to fix America, we need to restore Wall Street to its original purpose, serving businesses, workers, and communities, not just the oligarch class. I'm all in favor of capitalism. And Wall Street used to play an important role. But what we have today with the Wall Street casino is not capitalism. It's hyper-capitalism. America can be fixed, but only if we choose restraint. All right. Have a great day.